Hello, everybody. Welcome to the Trading with Ashley show. Such an honor to be with you today, and I wanted to dedicate this video to actually giving you an update on some MSTR trades that I have made in the past. Now, this has been such a volatile stock, and when you're trading a stock like MSTR, you definitely want to consider some type of hedging when you trade a volatile stock. And this is something that I go over with members in my community, and it has helped them a lot. So I wanted to dedicate a video and show you how putting a stop loss on a position of mine that was in significant profit, how it ended up allowing me to have MSTR be my number one trade for 2024. In fact, I have made over $340,000 making money off of this trade. But part of the reason I was able to make so much money off the trade was I got in early. And so a lot of you were with me when I showed a particular trade at Options Week, and I had dedicated promising I would actually do a trade based on the stock that you had selected for me, and MSTR was that stock. And it ended up being a trade that showed you the mechanics of doing a buy right. Well, the trade, as I had said it did end up working against me, but I wasn't destroyed. My account wasn't destroyed as a result of it, because after the sold covered call expired worthless, I ended up putting a trailing stop on that particular trade, along with some other shares that were in significant profit. And that trailing stop invoked itself when the stock pulled back to a certain level, and it allowed me on that particular trade, I cashed out with minimal impact to my overall portfolio. But then it also let my other shares be sold at a level that allowed me to enjoy that $343,000 gain. And so I wanted to spend a little bit of time today. I'll show you the actual trades that you can see what happened. I'll show you how much money I made on the trade. And then I wanted to take a little bit of time and show you what you want to consider when you are doing a trailing stop loss. So one thing that can be confusing, you can't have a covered call on your shares and a trailing stop loss. And it makes sense, right? Because if you have dedicated your shares to fulfilling an order from someone who has actually bought the call from you, you can't then have your shares sold if your stock pulls back under a trailing stop loss. So your broker won't allow that. Now, I will say covered calls are great if you don't expect significant downside, but trailing stop losses when a stock is already in profit, that is actually a better move, because it's hard to make up for significant losses if a stock has a deep correction. And that is riskier or more likely with a volatile asset. So I want you to keep all of that in mind when you are out there trading so that you stay safe. Let's take a look at the specific trade that I did that day that we were closing out Options Week. So the community had voted for me to trade MSTR. So when I was wanting to show how to do a buy right, where you buy the shares and then you write a covered call immediately, I purchased those initial shares for $442.97. I then immediately turned around and sold a covered call, and that covered call yielded me $11.17 a share. So now my new adjusted cost basis was $431.80. So I kept that $11.17 a share. The following week, MSTR started pulling back, and I implemented the trailing stop. Well, the trailing stop ended up selling the shares at $341.55. So all in, the way that you would calculate this is you would take the $431.80 minus $341.50, and that left me with $90.25 loss per share. So all in, it was a $9,025 loss. However, when you compare that to my overall position and all the gains I've had in this stock, it was a drop in the bucket for MSTR. Now, let's go take a look at the collective 2024 MSTR trades. Looking at my full 2024 year with MSTR, collectively, it has been my number one performer. As you can see right here, my cost basis was $566,885, and that yielded proceeds of $910,701. So my gain on this ticker symbol was $343,816. That's a whopping 60% return in 1 year. Now, this doesn't happen by accident. You have to be diligent and put proper trade management in to ensure that when you see gains like this, that you capture the gains. So what you're seeing here is a result of several different ways that I traded MSTR in 2024. There are swing trades in there where I would buy a cluster of stock when it was at a level of support, just simply wait for it to rise and then sell it. You also have where I would sell puts, put the shares, and then I would wait for it to rise and operate the wheel strategy by selling covered calls and having those shares called away. And that helped aid in what you're seeing right here in the profit. Now, this does not include all of the premiums that I received for actually selling the puts and selling the calls. That would push me over $1 million in proceeds for the year. But this is how you do it when you're going to do something like this. And if you're going to trade a volatile stock like this, two things to keep in mind. One, you never want to have too much exposure at any given time to the stock. So I would trade in and out of it throughout the year. And then the second thing is you definitely need to have something such as a stop loss or a trailing stop loss to protect you when you have gains. And I'm going to go take you into the broker and show you how to set this trailing stop loss. And it's best done on a volatile stock after it's actually risen to a point where you're comfortable knowing that you will be, when it's sold, that it'll be sold in profit. But you want to consider also putting in a stop loss where you may be taking a hit on the stock like I did on the original trade, but it met your limit of what you're willing to lose. So you have to have a trade plan so that you can successfully operate stocks like this instead of being a victim to it falling down too much. Now, the beauty of a trailing stop loss, let's say that I had purchased MSTR right here on this 20-day moving average and maybe at around 225. Then what you would do is you would attach your trailing stop loss to it. Let's say I put 10% on there, so I'm only willing to lose 10%. So what would happen is if it did not bounce off of this level of support and it came down below, once it came down 10%, it would sell my shares. But if it kept rising and it only came down a little, never coming down 10%, and it has a 10% trailing stop loss, I would have been able to enjoy it rising all the way up until, outside of this Bollinger Band, until it retreated back, and then it might have executed at that point. But that's the beauty of having a trailing stop loss, and you want to make sure that when you're entering a trade like this, you are entering it, especially if it's a larger position for you, that you're entering it at a level of support. And if that level of support is not respected, then you need to have some mechanism that protects you from losing too much on the trade. Once you have built up some equity in the trade, it's so important that you have the trailing stop on there as well. Now, you can't sell a covered call and have a trailing stop, so you need to choose one or the other. And if you have sold a covered call on your stock and the stock starts to retreat back, your covered call is going to be in profit. You could always go ahead and buy it back in profit, the covered call that releases your share so that you could then apply a trailing stop loss. Let's go take a look in my Robinhood account at Palantir. So you're looking right here. My average cost in Robinhood is $42 and it's currently sitting at $75. So if I wanted to protect this trade, I would go in and I would act like I'm going to sell it right here. When it comes to the sell order type, I come down here to trailing stop order. I would select percentage, and then if I want to, let's say, add 10%, you could do any price, but 5 to 10% is usually normal. And if I said 10%, then this would execute if it pulls back 10%. Now, here's an important thing to note. You decide how many shares you want to put this trailing stop on. If I don't have any covered calls, I could do all of them. That would be fine. But you'd want to look at changing this until good till canceled, because ideally it would stay on your shares and be attached to them for a lot longer than just the day. And if you look at it here, it shows you at this point in time, if it were to sell, it would sell it at 68. Well, that's no problem because I bought them closer, below 50. And so you can see here that it keeps your profit built in. And then you review the order and you execute. So it's a good idea to go and do this on all of your uncovered shares. Now, something to keep in mind, this does not work after hours or before hours. It only works during market hours. So you do want to keep that in mind. I hope that helped explain some of how that went. I'm actually very fortunate to have made such significant money on that particular stock. And when you think about the level of a portfolio that I'm working with, because I'm working with over $4 million in all of my accounts combined. And so you want to limit yourself to no more than 5 to 7% into any one ticker symbol in your opening position. And that will help insulate your portfolio if a stock pulls back, in addition to your trailing stop. You never want your whole portfolio held hostage to one stock. Now, I have just had the opportunity to do a full recap of 2024, and I'm excited to share with you and reveal to you what my best trading strategy was for 2024 that allowed me to outperform the S&P by so much. I can't wait to pull all that together for you. Remember, if you're with me, Trading with Ashley, and there's no trader left behind. Now, if you want to watch a video I did specifically on how to protect your portfolio, including trailing stop losses, you can watch that right here.